Are stock markets about to crash? Hello, ladies and gentlemen, and welcome back. Today we discuss what's occurring in the markets right now and why these three rejections could spell disaster for markets around the world. It wasn't just the stocks, though, that fell in the last 24 hours. We also had our key level for cryptos and many commodities hitting big zones. So why is this all important? Well, it comes down to three hot bits of information. First, we saw CPI, then we saw retail sales, and now we've seen PPI. All roads lead to higher interest rates for you in 2023. And guess what? It looks like they're going to be for longer. Let's discuss everything right now. Well, welcome back everyone to the Daily Show. We've got the lead news, macro data, key indicators, and all the hottest charts coming up throughout the session. And I've got to say, there's some big levels that we just reached in the last 24 hours, so stick around. Three hot bits of information: CPI, PPI, and of course, retail sales. 0.7% increase for the producer price index over the month of January. Now, this points to worse things to come for inflation. It's often seen as a lead. So unfortunately, it's bad news with more bad news with more bad news this week. And the markets finally paid some attention to it. But was it the news or more what the Fed said? Remember, we don't really want to be fighting the Fed generally in the market. Well, we saw Mr. Bullard, the one that told us that he was going to rate hike the absolute rubbish out of 22, and he ended up getting it done with the help of everyone else on the chair. Well, he came out, and although I don't believe he's a voting member this year, he said that he basically joined in Mester with urging half a point hike. So there are people on the Federal Reserve that believe 50 basis points is what needs to be done next to stop inflation. While this is now starting to push the 6% narrative. Now, I've said for a while, pushing 6% is going to be a very big problem for the US, and something will most likely break once you go past that 5.5%, 6% level. So we've got to be very careful, and markets didn't like it. But are we falling for some kind of stock market catastrophe? Is the market about to crash? Well, a lot of that comes down to options and also whether people expect it. Markets don't tend to crash when everybody expects them to do so. Now, recently, we've seen a lot of FOMO come through with everybody saying that the new highs were going to come and everything like that. But we do still have the biggest issue of all, which has to be options and puts in the system. For now, it seems like markets could move lower, and there are some good reasons why. Firstly, we've seen retail traders get all over calls again in similar fashion as what they did in February. We also know that we haven't really got a cheap market right now. I always look at this one. Follow at FX Evolution on Twitter if you're interested. 12-month PE ratios. Are we trading cheap or expensive? Well, it's not really super expensive compared to where we have been, but it's certainly not cheap. Cheap would be anything under the 10-year average, 20-year average, etc., which tends to sit around 17 to 16.5. With inflation going so high as we shared over here, you can see the new uptick. That's going to put downward pressure potentially on stocks through the swing. And you do need to be aware that if you see those trends starting to appear, you've got to be careful. And of course, we've also got the latest Philly Fed Business Outlook survey, which basically shows us what we already know, which is when we tend to go over zero here, we tend to be either already in or about to go into US recessions. And I think for most people, we have to realize that a US recession is very, very likely at this stage. The question is just really, when is it going to happen? Is it going to happen in 2023? Or is it going to be in early 2024? Bonds markets tell us there's a very high chance that it does occur. So do we need to continue to beware the market? Well, data says yes. Basically, we tend to fade in the back of February. Data, basically seasonality, all of these things can be taken into consideration when you're looking at the charts as complements and additional extras. That's what we're all about here on the channel, building a case, whether it bullish or bearish, to hopefully help gain edge in the markets. Well, data is definitely a point towards the negative side. It's showing us that this is the time when we tend to turn. We've also got ERP coming up. We won't talk about that today because we have done in our previous videos, but when a recession is called or just before or around a pivoting time for the Fed, that's when you tend to see this one go into the news. So it's certainly a risk that's there on the table. What about Q1 versus Q3? Well, Q1 and Q3 are both times when we tend to see the VIX jump up. At the moment, the VIX has been very lackluster. It hasn't moved that much. And of course, that means that there is room to potentially see some bearish action around these times. We also know that the Fed will hit a terminal rate at some point in 2023, most likely. Hopefully it's not 6% because that would be bad. And then after that point, they'll have to cut rates at some point because they need to support a sick market. And yes, this market will become sick due to these high interest rates. We've been at very low for very long in the world. And then all of a sudden we go to a super high interest rate. It will break something. The question is what and when. So remember these bits of information when you're looking at this in the future. When we get a Fed pivot, if we tend to see an inverted yield curve, that is the bonds market is still freaking out, markets don't usually give great results around that time. And it usually takes around 1/3 to 2/3 of the way through the cut cycle to hit the lows. Something to keep in mind when you're looking at these markets in the future. Did we see a defensive move by Wall Street? Not really. We saw the move into agriculture and inflation-based kind of stocks. Gold, not so much, was the big one, but I definitely think metals was up because of the inflation concerns, and agriculture tends to do okay around that time as well. Staples, utilities, and healthcare ended up being some of the most bought sectors on the session, and that's, of course, just really hedging bets by Wall Street. So just before we jump into the charts and we take a look at all of the key levels that you need to be watching right now, I wanted to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Well, Tiger Brokers have, of course, been constantly additionally adding new features to their platform. Today, I wanted to discuss one of those and show you how it can potentially help you as an investor or trader. But I also wanted to just say that I've also managed to get for Australian audience viewers out there, and I think maybe New Zealanders, the additional $15 Microsoft fractional shares. Yes, I love Microsoft. And of course, I believe it's the best stock in the market. And that's why I thought it might be nice to give that away as an extra bonus for just being part of the FX Evolution community. And of course, opening and funding an account with as little as 1 cent. Whether it comes to options, analysis, financials, or news, you can get all of the information for stocks such as my favorite here, Microsoft. So what's one of the additional features that I like about Tiger Brokers? Well, of course, for many out there, it's all about being able to purchase fractional stock. Yes, unfortunately, some stocks in the US aren't cheap. Some have been cheaper recently, but they can go in the hundreds. Here we have Microsoft is 261 American dollars to buy one stock at the time of this recording. So what can I do? Well, of course, conversion is something I may need to do first. I'll need to be able to get US dollars so I can purchase, of course, Microsoft stock. How easy is it? Very easy. Convert the cash, see full transparency on your rates, and click a button. Then you're going to get your US dollars. From there, all it's as simple as doing is going back over to Microsoft, putting in however many stocks you want, whether it's 0.2, 0.3, 0.5, or even a single, and you can then just press buy. It's that simple. So if you're interested in finding out more about Tiger Brokers and of course some of their special deals, you can do so. But do remember, I've also organized for all the Australians out there an extra special bonus, and that is now you get Microsoft fractional shares when you open up an account. It's pretty cool. Check them out today. All right, well, let's get back into these charts. We'll begin here with the VIX, which was up 10% on the session. Is that surprising? Not really. I mean, the VIX is going to spike. However, we may have to stop using the VIX as much due to these one-day expiry options that are basically coming through now. What about the bonds market? Well, the PPI result and, of course, Bullard's discussion points ended up spiking to a new high. So what that means is we made a new high on the terminal rate. And if this continues to go up, you have to expect stocks to react negatively to it. So make sure you put these in and you understand where the terminal rate is. And whether you're watching today's show or the future videos or do it yourself, you definitely want to be watching yield in 2023. So with an increase in yield, what happens? Well, bonds go down. They become less desired and treasuries are starting to get into this green area that we like. So around these levels here, this 100 to kind of 102 zone, this is where we theoretically think that from some type of investment standpoint, potentially TLT makes some sense. Obviously, it's a technical zone, so you've got to pay a lot of attention to it. But yeah, these lows and around this level here, pretty feasible and certainly an interesting point. If we do end up seeing terminal rates soon when it comes to yields, then as they drop, TLT should theoretically go up. There will be other risks, but that's the main one. What about high yield junk bonds? Well, they dropped as the market has still remained fairly stable. And we need to be paying a lot of attention to this divergence. Previously, we've used junk bonds during highs to show us the market's sick. We will be following junk bonds, and it was another down day for them. When we move over to the US dollar, what occurred? Well, there was some really nice trading where the market actually found a nice, beautiful rally through here, and it made a new high. Now, that actually was all front running the PPI result. Then, of course, we got Bullard's discussion points. The US dollar continues up. And at this point, it looks pretty strong. I mean, there are some issues, and I'll just quickly detail those issues. I wanted, and it didn't occur, a daily close above this high, and we didn't quite get it. Once we get a daily close above that high, we should be able to push the next narrative. And the next narrative is, of course, 105.25. So be a little bit careful here when it comes to the market conditions of US dollar. I'm still bullish on it. I think most people are starting to turn bearish or have been bearish on it recently, which is good because that usually pushes the squeeze narrative. But we do want the weekly to close above these highs. So do watch the weekly closes. These are all very important points. And I'd love to see it get above that 103.85 so that we can continue to see basically follow through from that level. What about gold? Well, gold doesn't like realistically higher rates, but it kind of likes, to a degree, some other things that are going on in the markets. Obviously, it's finding its way at this critical zone, the daily close of the previous level. We've got some wick purchasing. And at the time of this recording, you could make a case on really small timeframes to see some gold kind of bullishness throughout this current level. But it remains in the downtrend on the larger timeframes, such as the 2-hour and 4-hour swing. And if we do end up getting a new low that doesn't instantly reject, next level we're thinking is still 1800, 1790. It will depend on the US dollar, so continue to watch both together. Let's move over to copper. Now, I've been pretty bearish on copper recently. This is not really what you want to see when it comes to bearishness. We hit the trend line, which is of course a first take profit for a lot of people. And now we've seen this daily close above these wicks. So what I'll be looking for, especially if we want to see follow through from weakness in copper, is either coming to about 4.2 and then going down, or just instantly shorting around this zone, proving that this is a false break. So we're basically all action stations on copper. We have to watch it very closely because we did get the break to the downside. We have seen that tweezer pick, and this is a concerning level for people that may be short these particular things. Copper is partially inflationary, of course, along with a lot of other metals. So now that we had sickness, I believe, already behind it, now we've got this inflation story coming back through. So we just need to be careful here with this particular pair. US oil, stuck in the middle of nowhere. We'll move on to that chart again in the future, but we're still in the middle of nowhere there. What about natty gas? Everybody wants natty gas right now. And I mean, like, all retail traders seem to be talking about it. That's usually not a great sign, but we are forcing ourselves into some form of consolidation. I still believe that natural gas will most likely try to swing this low of 2.468 before potentially finding base. And I believe we're at the beginning of a potential base story. It's not easy to turn a market, just like we'll find out with the stock markets, and we have been seeing, when you have a massive decline like this or a massive rally, they tend not to, they either end really quickly with super aggressive moves, or if they start consolidating, it takes some time. So picking the bottom here may need to be watched, and will continue to do so. Let's have a look at Tesla. So Tesla hit the weekly expected options highs this week and then ended up shorting off those zones. This is not really the candle that you want to see if you're a Tesla fan, boy or fan girl, because yeah, it closed on its low. That's not really a great sign. We know Tesla is absolutely stacked with options. So this is probably manipulation of the options game to try to make the most amount of money for the street, for the composite man, and effectively, stuff over as many retail traders as possible. But it was a fairly heavy sell-off. We ended up going down 5.69%. And where are the buyers for this? Well, they might be as low as in these kind of low 190s at this stage. But realistically, Tesla is at a critical point. And if it does continue to bust down, and especially if we see these weekly closures, and you'll hear me talk about this a lot, weekly closures with lows, these wicks can be tops of the session or tops of these markets. Let's have a look at what's going on in options world for Tesla, and we'll refresh this through here. And basically, we have a lot of options. So we've got a 180 max pain. So that's saying that the current price of 198, technically the best price for Wall Street would be 180 by the end of Friday close. I doubt it happens. But yeah, we have those lows. We also have 190 puts, which is interesting. And we have a lot of 200 calls. So stuck between these two levels would probably be one of the best opportunities for Wall Street to be at. All these poor 250 calls and 230s and 220s most likely going to lose their money. And you just see the options activity coming into this big options expiration. Between 190 and 200 is probably one of the perfect closes for the street. Let's move over here to Apple. Another rejection week coming off. These are the high levels, the extreme zones that we've seen before. We're certainly paying attention to Apple. It's not giving us too much signals. We did have the expected weekly options high, just a few points away from where Apple ended up turning. But another rejection, and if it does end up, of course, making a new low, there's a potential for further sell-off through the Friday session. Let's move to NVIDIA. Now, this one would be a very sneaky trap if it continues its way down. Take a look at the weekly here on NVIDIA. This is going to be the most interesting. I'm very excited to make the weekly video. Should we see rejection wick coming down like we've had, and this to end up bearish? If that occurs, then we've kind of got a tweezer top. And they tend to be relatively good at picking key critical zones in markets and turning points in markets. So that's something we're watching. We'll move over to the indices now. We'll start with some international indices. Let's begin with the ASX, the Australian market. And you can see bad kind of rejection here in the previous week. And again, closing at this point pretty negatively. You're looking for the ASX to close pretty much on its lows ideally. And if that occurs, then that could continue to have throughput. I haven't really found a level that I like super for buying ASX at this point, so we'll keep watching it. But I do think the risk reward doesn't really make sense when you're at these highs. And that goes for so many markets. We're at key supplies. You've got to think weakness is starting to take over. CQQQ, key supply, key level for market weakness. And it's been weak recently. It's been consolidating. So we look for more information. We move over to the US 30. Well, it's still in the triangle. Man, this thing cannot be broken. Every time it comes through, it wicks back down. We're stuck within a range and we cannot make it out. So yeah, still in the triangle. Wait for Friday. Let's find out if it ends up closing below. But you'll notice here, again, the weeklies. This is the futures market. Doji, will we get a decision made? That is, the market closes underneath this area here, showing us that maybe some further weakness can come in from the Dow. Let's have a look at the Qs. Again, we look at the weekly, check out these 3 wicks. If we end up getting rejections on the Friday session, it makes it bearish. Could be further follow through, and rallies could be met by sell downs that push us to lower levels. And we'll talk about the potential lower levels in just a few moments. Let's move over to, of course, US 100 futures. You'll see the critical zone when we hit it, when we tapped it, the selling that's occurring. Let's move into the 2-hour chart. And one of the things that I like at maybe over the next 24 hours is we close directly on our lows on the S&P and pretty much the Qs. So what that points to is potential for further market sell-offs in the next action. It's basically saying the markets, if they were open for longer, who's to say they wouldn't have continued to sell off? They were pretty aggressive near the end, and they do say the close is the key. That's where Wall Street tends to do a lot of action trades. So what's up next? Where are the dip buyers going to potentially commit themselves? Somewhere in this structure seems to be a level that you could look at. And you're always using the S&P 500 generally to find these key zones. So just to report here, daily close, you can see how low it is. Weekly, of course, there's the rejection wicks if it closes like this in the extreme zone. Certainly not looking very positive at this stage. Here's the SPY, just so you can see it again. Most importantly, I believe that daily close is just underneath the previous wick or right on it. So certainly a significant level. And then we go over to the futures market. So let's have a look now at the S&P, and we've drawn some fibs here. So we've drawn the previous swing low to the high, and that's where we kind of got that potential chance for dip purchases. This remains a key demand zone. So basically this level is key demand. I wouldn't mind to see the S&P 500 come down and swing this. So effectively hitting underneath, because you remember the demand actually goes deeper than that low, and then potentially finding rallies. So it looks like there could be further shorting to come, and then maybe if the buyers are strong, they commit through here. If they don't commit there and you don't see technical switches, what are the next levels? Well, I believe 40.20, which we'll look at from an options expiration standpoint, and then probably 39.6, which we've talked about a lot. Then you've got the lows, which is 3900. So they're the three key zones that I believe sit underneath. But for now, we know this level here is demand. And I'm actually wouldn't be surprised at all to trap shorts in here would be a pretty good game by the street if they wish to actually continue to go higher. We're still theoretically in an upward trend on a lot of the higher time frames. We are not, however, in an upward trend on things like 1 hours and below at this stage. So do pay attention to what's occurring here in these markets. There's big shifts, and we know the bears sit up here, which we've discussed so many times over the last week's worth of videos. Let's now have a look at options. We'll go to the 17th and we'll look at the options expiration. So we've got a 405 max pain. We're only a few points off that. So you can see that again, it fits into that narrative of further dropping, then potentially finding some buyers near the close, convincing or confusing everybody. The poor 375 puts, sad face for them. They're not going to make any money. The 380s, unfortunately, will lose as well. But it's these levels like the 400 that is the most contested. You can see where the calls were at 420. They're going to most likely lose. And really, it's Wall Street's best interest where they've got the market right now. They've done a great job of trapping. They've done a great job of options manipulation into the biggest options manipulation. 3.5 million units open. There's a lot of them, and there's a lot of money to be made. And JP, I'm sure all the big players, I didn't mention anyone then, I'm sure they're all feeling it. They're loving it. And unfortunately for retail, we're being left potentially trapped if you haven't made the right decisions. Let's move over to Bitcoin. We did mention watch reaction here. We were waiting for this zone for so long. The market did end up tapping it, creating a pretty damn good short. If you got it, congrats. If you didn't, oh well, doesn't matter. There's always another opportunity. We do wait to see how this, though, will continue to react, because at the moment we have a high, we have a low, we have a higher high. We also have some demand behind here. So we can see we tapped into the top end side of that. So I think, we will end up finding out if it does end up getting underneath here. I'm pretty convinced bears really have this market as in Bitcoin underneath 20,206. Of course, you might say, well, how does that help me at 23? That's a swing level. This one, I think this is a key swing level. And at this stage, you're kind of at role reversal where resistance becomes support. I could see markets finding further weakness here in Bitcoin. It did tap a big level. I think it will have trapped a lot of people into longs. So if it is a trap, it most likely will not want to retest these zones too much more. That's because it will have already trapped people and it won't want to let them out. So yeah, Bitcoin, a big one to watch over the next week. I'm super excited for this chart, and I've got a special coming out next week about what our thoughts are on crypto moving forward. Definitely subscribe if you're interested in that. There's no real big news for the week ahead, as in terms of right now. So what we're looking at is basically the charts. We're letting the options expiration make the dance. And if you're always interested, remember to follow at FX Evolution on all the other socials. If you're interested in the 3 free trading cheat sheets and our monthly newsletter that we're going to put out soon, subscribe over there. And also remember, guys, to check out Tiger Brokers, link in the description down below. Microsoft stock for Australian traders out there. If you're interested in opening with as little as 1 cent, hey, it's basically free if you're interested in that. And of course, if you're anywhere else around the world, see if you have the opportunity to potentially check them out and see whether it's the broker for you. Thanks so much. We'll see you in the next one. Bye for now.